Think you know how to pick winning stocks? Think again. We are about to explore the 10 most powerful financial ratios that could completely transform your approach to investing. These aren't your average tips, they are game changers. Welcome to Stocks Screamer, where we promise to make sure that investment worthy stocks scream into your ear loud and clear. Financial ratios and metrics play a crucial role in analyzing a company's stock, offering insights into various aspects of company's performance. Here are 10 crucial financial ratios and metrics along with their desired values. Number 1. Price to earnings ratio. The PE ratio measures a company's current share price relative to its per share earnings. It indicates how much investors are willing to pay per rupees of earnings, highlighting the market's expectations of future earnings growth. Price to earnings ratio below industry average is desirable. Number 2. Debt to equity ratio. This ratio measures a company's financial leverage, indicating the proportion of equity and debt a company uses to finance its assets. A higher ratio suggests a company might be risky as it relies more on debt to finance its growth. Debt to equity ratio below 1 is desirable. Number 3. Return on equity. ROE measures a company's profitability by revealing how much profit a company generates with the money shareholders have invested. High ROE values typically indicate efficient management and profitable operations relative to its holders' equity. Return on equity value above 15% is desirable. Number 4. Return on assets. This ratio measures how profitable a company is relative to its total assets. It indicates how efficient a company's management is at using its assets to generate earnings. Return on asset value above 5% is desirable. 5. Current ratio. The ratio is a liquidity ratio that measures a company's ability to pay short-term obligations. A ratio over 1 indicates that a company has more current asset than current liabilities. Current ratio value above 1.5 is desirable. Number 6. Quick ratio. This ratio measures a company's ability to meet its short-term obligations with its most liquid assets. It's a more stringent measure than current ratio because it excludes inventory, which can take longer to convert into cash. Ratio value above 1 is desirable. Number 7. Earnings per share. EPS measures the amount of a company's profit that is allocated to each share of common stock. It serves as an indicator of a company's profitability and is often used to compare financial performance of companies. Positive and growing EPS over time is generally a good sign. Number 8. Price to book value. This ratio compares a company's market capitalization to its book value. It provides insights into the value that market participants place on a company relative to its actual net value. Price to book value less than 3 is desirable. Number 9. Operating margin. Operating margin measures the proportion of a company's revenue that is left over after paying for variable costs of production such as wages and raw materials. It indicates how much profit a company makes on a dollar of sales before interest and taxes. Operating margin value above 15% is desirable. Number 10. Cash flow. Free cash flow is the cash a company generates after accounting for outflows to support operations and maintain its capital assets. It's an important measure because it allows a company to pursue opportunities that enhance shareholder value if free cash flow is preferred. Thanks a lot for being along with us. If you liked the content, consider subscribing to our channel and leave a comment if you would like us to cover your favorite financial topic in our next video.